to my throat straight away. Okay, good evening, everybody. Thanks for joining us on a Monday. So, yeah, appreciate the change in the timetable and everyone accommodating that for me. Obviously, the first question, can you all hear me? Is the mic levels good? Cameras all set up correctly? Just let me know if there's anything out of the ordinary on the stream so I don't have to repeat myself in 5 minutes' time when I realize it myself. Yeah, simple reason. Tomorrow is my birthday, so I'm having the night off. So I just thought, well, we will run today's call from here. We'll run the Avengers call from today. And, you know, normally the market moves when we have an Avenger call. So I thought, perfect, we'll do it the day before and we'll be able to talk about everything without the market moving. Now, I wouldn't say that it is... Chris, you've confused me there. Hi, Harry. Poor signal may switch to phone and appear as two users. Okay. I got excellent condition myself, but I will, whatever works best for you. I lost my train of thought there. Anyway, can't necessarily remember now. Yeah, the market, it's moved a little bit today. We'll obviously go over that, but in our usual times, a memoriam kind of case, we're going to go with a bit of the news to start off with. Have a look at what's been making some of the bigger headlines this week. I didn't actually cover the fake rumor that Gary Gensler was going to resign, but that's basically been debunked, so we don't need to worry about that one so much. We'll have a look at some of the questions you've asked me. We'll then go to talk about a research token which you guys probably know far better than I do, GMX, a decentralized spot and perp trading platform, which I know some of you guys have used in the past. I've personally never used it. But we'll have a look at that, we'll have a look at what it does, and also the token itself and whether or not it's worth investing in. And then we'll dive back into the price of BTC and some of the other ones. We're going to have a macro view on some of the stuff there, just, you know, where are we really going? How long have we got till certain key dates? You know, is now the right time to start accumulating? And then we'll have a look at some alts. We'll have a look at how alts are performing against BTC, and again, optimal buying times and levels. And I suppose I put a question in there because, you know, this is now the time. I mean, we've been talking about it for the past year, so, you know, over the last 6 months certainly has been the time to start accumulating pots, whether that be in alt or BTC. And I think the question was going to be, as I put in the chat, you know, realistically, what are you aiming for? What do you want to get out of Bitcoin by, say, the year 2026? And I've kind of put it as Bitcoin because, you know, I've only got so many characters to use and so many different options. But it's kind of just a feel of where you think you're going to go. Now, notice I've not put what do you think the price of Bitcoin is going to be. More just, you know, where do you see that's a good level for me? And, you know, the kind of reason I've said that is, again, I hark on about this quite a lot, is just formulating that plan. And even if it's a rough thing in your head, if you suddenly knee-jerk answer to that, I'd love anywhere between 1 and 5 Bitcoin. And suddenly in 18 months' time, you have 5 Bitcoins worth. You know, maybe they're starting to think, right, well, I've already got to that goal. Is this certainly a time to start taking some profits? A discussion for another time, but it's always just useful to have, you know, these round, large numbers in our heads going forward. Anyway, enough of that. What we will do, and now the vocal calls are warmed up, is we will dive straight in and we'll have a look at where we're going for this evening. So let me just move that across and get other screens up so I can see what I'm doing. Perfect. Okay. Here we go. This is the move that I was talking about with BTC today. Now, it looks like a fairly monumental move, but actually, it's only about a $500 move. And although we'll go into it in more detail a little bit later on, we've still not taken out the highs that we've seen even 4 or 5 days ago, but also about a week and a half ago. So still a lot of time to go on the day, but we just want to see how this price action is going to move. And what will be interesting is it's the 4th of July tomorrow, American Independence Day. So American markets will actually be closed on a Tuesday. So they've been open today, closed Tuesday, back tomorrow. So could be an interesting day for that. But that's just where that one sits. The dollar has kind of stayed a bit stagnant with this recent move. Ethereum's moved up as we would expect with BTC moving. And nobody's corrected this on me. But for the last few... oops, wrong thing there. Apologies. For the last few weeks, we've been staring at the S&P 500, and some of you may have noticed, some of you may not have, But if I just do that, it basically looked like that for 5 weeks solid. And that's because, and I kept on commenting on it, going, "No, it's not doing much, it's about to drop." But actually, it's because the chart I was using went out of existence, so it never bothered updating. I noticed that today. And obviously it's moving up. So we're getting back to, well, certainly highs from, over a year ago. And we're touching on those April, May highs that we had for us around about the time of the, this would have been the lunar crash. So a very strong 6 months that the markets have had, particularly in the NASDAQ, although this isn't the NASDAQ chart. But yeah, I reckon if we look back 6 months ago, none of us would have thought it was there, or we would have given it a low probability. But that's where it is at the moment. And, mindsets may be shifting, should I say. Okay. We'll come back to that one later on. So let's just have a look at some of the news. There's a couple of stories just to start off with. I'm not going to dive necessarily into them, but a couple of things that we've seen with exchanges that, we perhaps use more than others. But KuCoin have introduced mandatory KYC. So they announced it last month, and it will start from the 15th of, or it might be the 14th of July. Now, for me personally, this isn't necessarily a problem because I actually am KYC'd on pretty much all of the centralized exchanges. But if you haven't on any of these exchanges, and particularly KuCoin, just to let you know that you won't be able to deposit any funds. And I think they're actually going to restrict what you can do on there in terms of trading. So you'll only be able to sort of withdraw from where your current position is. So if that's a platform that you think you're going to use quite regularly, you may have to just go through the very first stage of KYC. I've not necessarily been, bucking the trend of crypto people here against that. I'm the kind of idiot that submitted tax returns for the past 5 years for all of these. So I'm just happy to sort of be KYC, as I said, done it quite a while ago for pretty much all of the exchanges that I use, or certainly that I use regularly. But this one popped up, and obviously people were already declaring it was the end of KuCoin for that. In a similar note, why have I not got any of these articles near the top? Kraken has been ordered to disclose user data to the IRS for tax compliance. Now, obviously, this is more pertinent for any of our friends that are based in the United States. But effectively, anyone who engages in transactions exceeding 20 grand in a calendar year, their data will be provided to the IRS if they use it on Kraken. Now, 20 grand, even if you've got a small account, that's actually very quickly you can achieve that. It's only 20 transactions if you only had $1,000 account. So it's going to come along quite quickly. But what I did highlight down here, because I didn't look into the case, I tried to make sure I hadn't done a clickbait headline, but it actually says here the United States District Court for the Northern District of California has ordered Kraken. Not knowing the difference between federal and state laws over there and everything else, I don't know then if it's actually just those that are based out of California and use Kraken that have to have their data submitted to the IRS, or if they're just a department that's representing the whole of the United States. So if you are based in the United States and this is something that concerns you, you'll probably even know the answer to that already, or I suggest us having a look back at that information. And if you don't like that, then you just have to go and find yourself another exchange, I'm afraid. And then, the news continued to hit us towards the end of last week and the beginning of the weekend. And for any of you that were, again, another article that's not down at the top, for any of you that were wondering what the hell was going on with Bitcoin on Friday night, the price of it just moved astronomically, really. So if we find, astronomically, it's, again, a poorly chosen word, but it's this blue candle in the middle here. And it's almost a perfect spinning top. We had it absolutely drop down, to below 30,000, immediately bounce all the way back up, then fly up to levels that we're kind of seeing at the moment, 31.2, before retracing all the way back down. Now, I don't necessarily suggest that this was completely based on the news, but there was certainly some news articles that dropped over the space of 12 hours that I think may have moved the markets. And they all had to do with recent ETF filings that were made. And here's where it is. So the first announcement that came out on Friday was the SEC deemed that the sum, we didn't get the information initially, spot Bitcoin ETF filings were inadequate. And so the concerns were, well, was it the all singing, all dancing BlackRock? Now, this article suggests that it was BlackRock, although other articles I've read mentioned that it wasn't BlackRock. So there's probably still a little bit of confusion there. I'm kind of just because of what happened afterwards. I don't think BlackRock was one of those ones. I'd be happy to be corrected. Anyone in the chat there, but the likes of ARK Invest, Fidelity, and other ones, which I think I'll pick up in another article I found up later, effectively were told by the SEC that they were not sufficiently clear or comprehensive. Everyone thought they were going to get flat out rejected, and that's potentially what spooked the market. As the day rolled on, it actually turned out that there was just a particular area within each of those applications that needed clarifications, and they could resubmit those. And so again, Fidelity on that same day apparently refiled for a spot ETF. Now, what is it? What was it that caused them to suggest that it was a particular problem? Well, this is why I think that actually it wasn't BlackRock. So what the SEC were suggesting was anyone who had filed under the CBOE, which is the Chicago, I can't remember what it is. Is it Chicago something? I should know this because we talked about it so many times. Something of exchange, but I can't remember now. I'll come back to that one unless someone wants to tell me in the chat. They needed to use Coinbase as their surveillance partner. Now, that is what BlackRock had done. Now, they had filed theirs with the NASDAQ. So, again, they filed theirs through a different place, which is, again, why I'm thinking that BlackRock wasn't the ones that were initially rejected. And effectively, the SEC was saying, this seems to be what's missing. And so everyone that had theirs rejected refiled their applications, just highlighting that it would now be Coinbase that would be their surveillance partner, which is interesting in a couple of ways. Because one, we still know that the SEC is after Coinbase for security violations, which is interesting that potentially they are favoring Coinbase as their surveillance partner, but we'll leave that one for another time. But also, are BlackRock on the right track then? You know, if Coinbase are sort of, not Coinbase, sorry, if the SEC have had a look at all these other ones and some of them came after BlackRock's applications and they've gone through them and gone, you know what, that's wrong, but they haven't rejected BlackRock's using Coinbase as a surveillance partner. Is it because BlackRock are on the right track to potentially getting theirs approved? Now, again, we don't know, but speculation was that speculation. God, I'd read chat and then I lost my train of thought. That speculation may be what then caused the price to go all the way back up to 31,200. But as I said, the market soon corrected itself. And again, potentially, moving on to the next story, did it correct itself because our good man himself, Michael Saylor, confessed to MicroStrategy purchasing another 12,000 or just over 12,000 Bitcoin over the last 2 months. Now, previously, when he's done this over, say, the last 18 months, whenever he's announced it, it's kind of been a running joke that it sort of signified a local top for Bitcoin, and we've normally seen a retrace from that. And I suppose the question now is, has Mr. Fantastic himself, Michael Saylor, done it again? Has he picked the local top, or actually this time are we looking a little bit different? Well, the weekend's happened now, and we've seen up until today, Bitcoin's just been absolutely stagnant over the weekend and just consolidating at around about that $30,500 level. Yes, there has been a move now, and we'll have a look at that a little bit later on. But it doesn't look like it's the local top that potentially previous MicroStrategy announcements have been made. So maybe this time we've actually cracked it, and he has gone and just dollar cost averages in. Now, last time we talked about Michael Saylor purchasing was the beginning of April, and I think his average purchase was $29,300. Now, in the 2 months since then, we've actually seen Bitcoin retest 24,500. So suffice to say that of the 12,000 Bitcoin he's got, he's probably purchased that below the $29,347 or what his average buy-in was back then. And so as the price currently stands, MicroStrategy are probably back in the green and just now with a healthier position. And it's astronomical to think that they actually hold 152,000 Bitcoin, which is crazy. You think there's what? 21 million that's going to ever be mined. There's about 1.5 million that haven't been mined. So let's just say there's 20 million left. I know it's 19,500. But I can't even work out what that's going to be. It's going to be 8160. He earns about what? I can't work it out. Is it 1% or 16%? I was going to say, is it 1.6% or 16%? It's 1.6% of all Bitcoin out there, which is crazy. And then when you factor in any Bitcoin that's been lost, or the Satoshi wallets and all that kind of stuff, that number is only going to go up. So we talked about last week in terms of whether we invest in Grayscale, and I potentially said maybe there's an opportunity to have a look at MicroStrategy because it's also a business and a company outside of that. But just given the size of their Bitcoin holding and seeing press releases like this, just really bring it into the fold. 152,000 Bitcoin. You know, looking at our poll at the moment, and I appreciate it's only been going 20 minutes, 60% would be happy with anywhere between 1 to 5 Bitcoin. I mean, that just shows you the power that MicroStrategy are probably going to hold. And a lot of people have been talking about, whether or not the likes of BlackRock or Fidelity or ARK Invest or anybody else, when they get their ETFs up and running and they have to spot purchase all their Bitcoin, whether Bitcoin's going to lose that decentralized nature. Well, if you're concerned about the likes of BlackRock buying it, then and that turn it into a more centralized, then MicroStrategy have already beaten you to it. I mean, they hold such a large percentage of the circulating Bitcoin supply that they already are the first biggest player. Now, yes, the ETFs are going to have to buy it from somewhere, and maybe MicroStrategy. I mean, I think they've only ever sold once back in December, and I think they sold like 700 Bitcoin. It wasn't even a particularly large amount. I don't think it's really in their mantra at the moment to sell, but I can't see the likes of BlackRock and Fidelity being able to afford to buy that much Bitcoin straight off. And the what it'd do for the price, even if it was just a short-term spike up before people started taking profits, would be pretty impressive. But yeah, some interesting stuff within the news there. I'll be honest, I'm sure there were some other things, but nothing really caught my eye. There was an interesting bit, I suppose, on the weekend, as I mentioned, with rumors going around that Gary Gensler was going to resign. I don't think that would have changed the SEC's stance, particularly, if I'm honest. But they've seemed to be unfounded. The SEC have come out and suggested that. So, yeah, I'm not sure where that started. Just some hopium, I think, on crypto Twitter. Right, let's go back into the chat and let's have a look. Stuart, yep, I will be 41 tomorrow. Thanks for the happy birthdays, everybody. Zero surprise, this is California. I know, if California is like a social experiment just gone wrong at the moment. Nick's put, hey, Harry, maybe you mentioned it previously. Are you as much as Sign back in the market? I sold at 29k, just considering aping back in again. So so at one stage I was about 70% back in the market. I'm probably 55 to 60 now because I just tidied up a lot of loose ends that I kind of had. And so I sold some of those. So no, I'm not as much as Simon's in the market, but I've just been steadily building my position, as most of you know, for some time. What has been great to see these last couple of days, and it may not last very long, is that my alts have boomed again, particularly Polkadot. So that's been nice to see, and just sort of just keep on buying. The markets will turn around. Now it could quite easily turn again, and we could see that retracing, but I think I mentioned a couple of times, I'm not necessarily bothered so much about that now. Most per evening to you. Harry is about 6% in, and of that, around 20% is BTC. Yeah, it's about, I think that's spot on there. I do have 0 Casper, and I do have 0 GMX, you're right. And it is a bit of a different strategy. So I've kind of filled my pots, if you will. Simon put out a video I did on sort of this pot system, and I think I originally recorded it about a year ago, and I've kind of just been filling those in. The one thing that I've missed out and not bought anything yet is Ethereum. Kind of, I know, like, there's a head and a heart kind of thing. In my heart, I just don't really care about Ethereum. It's not that it's failed. I just think, it had first mover advantage. It is an entity amongst itself now. I don't think anyone's going to kill it as such. But I just think it's got enough problems with it that I'm not that interested. But my head also says it is the second biggest crypto out there. It's the biggest altcoin out there, bar stables, I suppose. And so maybe I should invest in it just from a financial point of view. And I kind of just think maybe I've missed the boat a little bit there. So if we get a really good pullback, Ben Cohen pullback to $600, then yeah, maybe I'd ape in. But at the moment, no, I'm not within that. Things like Casper, I put a target. If it gets to under $1, I'll probably buy a very small bag of it and just see where it goes. But maximum, because it'll be in my risk pot. Maximum it would ever be would be about 2%. And GMX, well, we're going to talk about GMX later, so I won't ruin the surprise on that just yet. Every asset eventually becomes centralized. Yeah, when the witch hold it, I agree. Gary Gensler news was just fake AI generation, yeah, probably. Simon also sold some BTC into Casper today. He did, you're right. Under a cent. Did I say under $1? Sorry. Yeah, under 1 cent. I mean, I think there's some people that have sort of posted that when these ASIC miners get in there, just with the rate that they are going to be able to mine this, it can get down to, half of 1 cent, 0.005. I just have to work that in my head then, and still be profitable for them. So, I'm going to try and aim between under 1 cent and down to about that level. And I'll be buying, a couple of grand's worth. It'll be nothing huge. And then if it does hit Simon's expectations of 50 cents, then boom, that's 100x for me. I'll take that all day. Okay, right. So that's where we are with that. Caught up with the chat. And yeah, we're good to go. We'll move on to some of the questions. Just let me have a sip of water. Apologies. Some of you may notice in the bottom left, I've zoomed in my camera a little bit more today. So it might be a bit more zoomed. It certainly was when it was full screen. But yeah, don't think everyone needs to see the crap in the background. So Richard's put, Harry, could you take a token review of Altura, ALU, when you get a chance, please? I will add it to the list, but I did just bring it up here. So I'm not going to necessarily run through it. I'm just going to literally look at the screen. First time I've really given it any look and just see what we can see. So it is sub 500 on coin market cap, as it's 488. It's got a market cap of 28 million. So it is like, very small cap, low cap at the moment. Looking at a total supply of just under a billion, 990 million. And actually 72%, 720 million worth of it is actually already circling. But you can actually see that it has been around for a while. It's been around since, summer 2021. So it saw a huge spike up. We haven't even got into what it is yet. Right at the peak of the bull run, and then it has just died like all other altcoins did. And it has just come back down to this level. So it got to nearly 45 cents, and we're down at 4 cents now. So on the face of it, and you can have a look at just the history, we're talking 12 months it's been at 4 cents or below, building that base from 3 cents to 4 cents. So, a pretty tight range there. And without really knowing what it is and any of the utilities or whatever, we can certainly say that it seems to have found a fairly strong bottom. You think about all the incidents that have happened from May last year to where we see ourselves today, and it's still acting in and around that 1 cent range difference. But what actually is it? I did obviously click on the link. So it has an interesting premise, I'll give it that. So it is Web3 infrastructure for games. So an opportunity for people to create, update, and transfer NFTs in-game. Now, I don't know if perhaps this was suggested because I talked about NFTs a few weeks ago, and I really think that NFTs within the gaming industry could be a player. But when I saw this, I actually got quite excited. I thought this is definitely worth getting a look into. So I think I have a token for next week, and so I'll add it to the one the week after, which will be the 18th of July. But other than going onto this page, I haven't dug into it yet. Let's go back. George has put hardware wallets. At what size portfolio should you be before getting one? Do you store all spot investments on there, or just larger ones? And does Trezor support all the coins that Science Spot is invested in? Okay, so we used to have a dedicated security thread. It's not there in the channel anymore, but I think a lot of the information was sort of compacted into a video. However, my 2 cents on it all is, even if you only have $1,000 in crypto, you should have some form of hardware wallet. Now, it doesn't need to be an all singing, all dancing Ledger or Trezor or any of the other more expensive ones that are out there, but you should have some form of cold storage. Now, A lot of ones will do paper wallets, which you could potentially do, which is very old school, particularly with Bitcoin, of just printing out the code, creating a code and then printing it out, and you can carry that in your wallet. Hence where the name came from. But I would suggest if you had £1,000 or $1,000 worth, investing the £70 it is to get a ledger is, in my opinion, worth it. And anything more than that, absolutely. I mean, I think it should be mandatory that if you're in cryptos, the absolute first thing you should do, you should have to prove that you've gone and bought yourself a hardware wallet, and that would be hard to do. But the principle there is you absolutely must have one. And I try and have absolutely everything on or protected by my hardware wallet. And I'll explain what I mean by that in a moment. So, and it doesn't matter what it is, doesn't matter how small it is. I will confess though, with the example of OKB, which is the utility token for OKX, the exchange, I've just left that on the exchange. Now I actually can send that over to the Trezor, and I only found out about that today when I was researching your question. So I will move it across, but that's pretty much been the only one that sat there. Occasionally I will move stable coins over to an exchange, and then I'll set some buy orders. I've got some Bitcoin buy orders that I'm building up as well. So there is some money of mine on Binance, but actually still the lion's share of what does remain of my stables is just back on my Trezor. In terms of, does Trezor support all the coins that Siam spot invests in? Right, well, if you're thinking about getting a Trezor, now, first and foremost, the Trezor is more expensive than a Ledger. Well, the different models there are, but generally the Trezor is more expensive. It's a bit more user-friendly, in my opinion. So if you are looking at a Trezor over a Ledger, and Ledger does have plenty of FUD that's come out recently in terms of risks of back-end access into your Ledger account and all that kind of stuff. So if you think about a Ledger and you don't know anything about the FUD, definitely research that and see if you're still happy with it. But if you go to Trezor, and if that's what you're looking at, you can actually go to this section called coins, and it will tell you all the supported coins. Now, it lists quite a few tokens and coins that are down here, but actually you need to investigate and interrogate it, because Solana is not protected. It cannot be supported directly on the Trezor. Polkadot is another one. But all these other ones, they can be. And then, you've got varying ranges like Tonecoin. What was this second column? So it doesn't have Trezor Suite, but you can send and receive it. And you can just go through there and see if there's ones that you like. So Siam wants Casper. I know Casper's not on the list. GMX is a bit of a weird one because it's on here, but you can't store it directly on the Trezor. So you just got to bear that one in mind. Now, what you can do, and what I do, is I have my MetaMask wallet. So in this little thing in the top right hand corner, I'm on the Arbitrum network at the moment because I needed that for GMX, which we'll talk about. But if you go to that little symbol, so you log on to your MetaMask that's on your desktop, you go to this little symbol in the corner, and then you go connect hardware wallet. And then you can just select which hardware wallet you want to connect. Okay, I'm going to close that down so I don't do anything stupid. Where was I? Here. Now, once I've done that, my MetaMask is now protected by my Trezor. And what I mean by that is if I want to move anything off my MetaMask, I have to have my Trezor present and I have to go through all the same steps. So it may not be stored. And when we say it's stored in our Trezor, it's not physically stored on your little Trezor device. This little device is just an access to a wallet address that is in the ether somewhere. And so exactly the same as with wherever this ether, this wallet is stored in the ether, and I need my Trezor to move stuff from it. That's exactly what happens with my MetaMask. Now with my MetaMask, I can, have many different networks on there. So I can have things like an Ethereum network. I can have the Avalanche network. I can have the Binance Smart Chain network, Polygon, all those other ones. And then I can just store whatever tokens are on there. And then if anyone, got access to that, unless they physically had access to my Trezor and went through all the security codes and measures that you needed, they wouldn't be able to move it from there. So it's as good as being stored on your Trezor. So things like GMX, so GMX can be stored on your MetaMask, and therefore you could use a Trezor or a Ledger or another to protect your MetaMask. So that's a long way of saying that a lot of the ones that Siam has is there. Now, I actually have no idea about Casper. I think you have to download its actual own individual wallet off the website. So you'd have to go through that way. Whether or not that can also then be protected by a hardware wallet, I unfortunately don't know, because I've not got that far in my journey. Now, if you were looking at going for a ledger, you can have a look at exactly the same. So ledgers, as I say, start from about £70, but the amount of stuff you can store on your ledger is far greater. So this is just a page of 20 tokens, and there are 83 pages. So that's what 1,600 tokens it can store. So, you know, granted, there's 20,000 cryptos out there at the moment, but you can have a search and just see if some of the big ones that you want on there. I don't think Casper's on this, but let's have a look. Oh, didn't find it. So just a bad example there, but I'm just double checking. So you can use that and store it there. Now, I don't really like the UI of it. I used to have like I still have, I don't know where it is actually. It'll be around here somewhere. I have my Nano anyway, somewhere in here. But it's like, it's a bit fiddly, and you've got to like just buttons to press to flick through menus. I just never really liked it, so I never really used it. But it does exactly the same job as a Trezor, so I'm not disputing it there, and it is far cheaper. What I would say, sorry, it's turned into a bit of a security lesson here, is if you are ever going to buy one of these, make sure you buy it from the manufacturer and you buy it new and the box is sealed. Okay? Because you don't want to be buying a second-hand one of those for obvious reasons. So yeah, so that's where we are with that one. I'll just go to the final question and then we'll have a look at the chat box. Greg's put, appreciate your thoughts on this. To account for fluctuations in the pound and the USD, is it worth monitoring cryptos in pound pairs for spot moves? Well, absolutely, I think it is. I actually already do this, but I do this because I buy my BTC for my business through an exchange called CoinPass. I think I've mentioned it enough times now. And when I do, I buy it with pounds. So I do actually monitor these, and you can see in this here, I've got my crypto GBP. I've just got the three that I follow. And I also know that CoinPass do all three of those. Apart from I only actually buy BTC with it. But I understand what you're trying to say there, because you're saying, well, actually, there could be times where, you know, the pound is strong against the dollar, and that might have an impact on Bitcoin, depending on whether or not you want to buy or sell, and whether or not that's a strong pound is favorable for you to do that. And is it worth having a look? Now, it's all about, you know, one, mental capacity, and two, you know, how often you're going to be doing this. And the reason I say it's mental capacity is the price of Bitcoin is just, everywhere you look, it's always in dollars. You know, that's kind of it. And of course, there is a pound conversion as that happens. Now, if you know, have the mindset of, so I see it as dollars, but I can convert that roughly in my head to what the British pound sterling equivalent is, then go for it. I mean, the vast majority of you guys that are on this call, we are, you know, we're based in the UK, and if we are looking to take profits, by the way, I actually cashed out some money today and it worked, which I was amazed at. Then you want to know what it's going to be in pounds. But at the same time, the chances are that it's not going to fluctuate the price that significantly, where you're going to think, wow, I've lost out on maybe $30 for every one whole Bitcoin that you hold. But, you know, I don't want to rule against the fact that there could actually be plays to be made. But just to give you sort of an example of this. So I've got the BTC GBP chart up. But what I'm going to do is I will add this one. So this is the BTC tether chart. So effectively USD. I'll add it as a price scale. Close that. All right. And we'll try. I'm just trying to mirror it up so that, not so that they align so it proves my point, but just to get sort of similar kind of size. But what you can see now, I don't know whether or not to change this color. Let's have a look. See if a different color makes it any better. White maybe. Okay, let's just try that. So we've obviously got the white line now representing the USD value, and you can kind of see, I mean, I could change it to a bar, but I think that would just really confuse people, but you can see the lines. So the lines are just, each point is now just the close of each of the days. And it is kind of mirroring the same movements. But there are levels of detachment. We can see that does kind of happen. But generally, even that spike up there represents this green bar going up. I'm sorry, I should zoom in just in case people can't necessarily see it as well. So, the spike up there is not necessarily as far, but that's probably more down to the scale than anything else. Then we see actually the dollar value climbs up over those 3 days while it stays stagnant. But we're talking about, from $64 down to $34. So we're talking about, $30 at the end of it. Then they all kind of stagnate down, and then we've got that spike up over which we've seen over the last 3 days, or last 3 weeks, sorry, should I say. So yes, I think there is an opportunity to do it. Whether or not you're going to make masses out of it, potentially not. I more think of it as I generally have a feel for what the exchange rate is. And if I know that there is a very strong play to be made in either direction, then I might look at it from that side. But kind of the other thing is, once, my pounds, if you will, have been in the market since, well, the last time I put a major amount of money in was around about September, October 2021. So my pounds have been in the market for 2 years, and apart from taking profits, the vast majority is then just either being in crypto or stable coins of USD. And so I've kind of missed any major plays, particularly when they were in stables, and potentially I could have taken advantage of the strength of the pound versus the dollar. If we go to, times when, let's just get rid of this one because we don't need it, but times when, the value of the pound died to the dollar and it was almost on par, and we saw that rally up, there could have been a play there because I was probably out of the market back end of last year. I was, but I didn't take advantage of it as such. So I think there's definitely ways to be done. As I say, it's just how active and and how much mental capacity you have to actually take advantage of those sort of things. I just keep it because I do make purchases in it. And sometimes that can be good and sometimes it can be bad. It can be relatively frustrating because you might, I'm still human, so I will look at it in a dollar value, or I'll do a fib retracement level or whatever and think like, that's the value. I'll then convert that across to what I think is a suitable pound value. And then actually it doesn't trigger by like 50 quid, because although it got down to that level, the exchange rate on that time happened to have changed, and so the price never quite got there. So it can be quite frustrating because I don't watch it often enough. Anyway, I hope that one helped. Let's just go. There's been quite a bit of chat, so let me just get back to answering some of those. Richard's put, have you seen Ben Cohen's video on the past pre-halving years? There's always been a roughly 50-50 bull bear, and we've already had 5-6 bullish months in a row. Wonder if we'll break down. Richard, look, I've got this old chart up to talk about later. This one's one I've had for quite some time, and I think it's time to potentially bring it back out just to focus everybody's mind. So I'm not sure if it's going to answer what you're saying, but we're going to talk about it and give you my 2 cents worth anyway. Let's just get to a screen which looks a bit darker. There we go. Richard, Ben is only 35% back in, so I'm assuming he sees a lot more falling. He's 35% back in into BTC, spot, and 0 in E for any other alts. Just call me Bijan instead of the Rational Biohacker. Great YouTube name, by the way. Bear in mind that Cohen has been wrong before, but up to now he's been spot on. Yeah, I agree with that. I was just thinking if it was you in his analysis this year. Is it just me, or is everyone seeing clickbait YouTube videos and articles everywhere expecting a bull run soon? Had my eyes off the ball? Is this new, or has this been like this for a while? Well, I mean, let's just have a look at the fear and greed index, and that will answer everything you need to know. If I just go back to CoinMarketCap, we have these. Fear and greed is currently at 61. It's just tipped into the greed section. So we are getting to where people are potentially comfortable, too comfortable with it being where we are now. We're only just in the greed section, so we've got plenty to go. I'm actually going to get the proper fear and greed index up because I just think it's better. So it's saying 62 now. And then if we just have, so what, back in April, it was actually higher, it got to 68. So, it is sort of still climbing upwards, getting us out of that bear market. If I look at past bear markets, sort of this December 18 was when it got down to 3,100 and it sort of climbed up out of it, and then it absolutely dumped back down. Well, we've had the climb out of it. We haven't had a huge collapse and something to really shake the market back. But at the same time, to be fair to these clickbait channels, we still have had a lot of bad news over this last 6 months. A lot of FUD, the SEC side of things. We've also had the Federal Reserve and the interest rates and everything else that's sort of been trying to get under control. We've had major exchanges attacked and all that kind of stuff, and yet, whilst it has seen small corrections, and I do say small corrections, relative corrections, maybe 20% max, they've always recovered, and so there does seem to be some sort of strength in the market, and that can't be ignored. Now, going back to last week's analysis, which I'll touch on again in terms of rises, we potentially are in rise 3 of the daily, so we could quite easily see that rise up 32 to 37,000, and then a correction back down to say 24 or whatever, staggered correction down to 24 before the halvening, and then off we go. But people do get super excited, and we go back to this, probably do it on the weekly. If you have a look at the last bull run, I'm not using the other one just because it's coloured in, but the halvening was around about here. I mean, it wasn't exact there, but it was around about there. Okay, so with that first drop, we had then that rise up, and then a drop down, a little bit of a dead cat bounce, and then this one's an interesting one because this was COVID. I wonder if that would have been it, and then just get rid of that month. But anyway, that actually did happen, and we went that way. But we had that strong rally up from the base, which took from December to July, so it took 6-7 months, strong rally up, and then a correction. We've had that base around about November, December, strong rally up. We're into July now, and the question is, we'll get into what that box means a little bit later on. Are we then going to sort of see some form of correction leading into the halvening before the parabolic run? And we go back to this one here. God, where was the bottom? I think I should have used my other chart. I think it was. Oh, I'm gonna have a look. It was July. Okay. So around about there. We found that bottom, not as strong, although it did go from, this doesn't look as big a move, but it went from 150 up to 300 cents. So it doubled in value before retracing down. Now we're kind of getting to 15,000, 16,000 to 32. There's that double in value, but this one here went from 3 to 14, so that was times, 3 or 4 times the value. So don't necessarily think we need to put too much weight on that. But you're right, there are a lot of people that seem to be turning quite bullish, and I think in some respects rightly so. We are seeing, the United States spent the first 6 months of this year trying to strangle cryptos. They still may do that, but there seems to be positive lights and chinks in their armor that people are grabbing hold of in terms of these ETF submissions. We do have the fact that inflation is coming back down, and therefore, I think Chairman Powell has kind of said a couple of times that he still thinks there's 2 more interest rate hikes, but the lights at the end of the tunnel for the US there. But then you come across the pond to the EU and to the UK, and whilst we may not have got inflation under control, we seem to be, I say we as in the UK and then the EU, seem to be on much stronger footing and much more acceptance of crypto and bringing that regulation in. And whilst the regulation isn't necessarily there yet, there seems to be those positive steps. So, I think there's still positive. I still think that there's an opportunity for some pain to be had when people get too excited. We have a look at the long versus the short data to kind of see where sentiment is at the moment. But if you just go off the fear and greed index, people are starting to get greedy again. And I do think, a lot of people have spent the better part of these last 6 months building up their positions. And those that didn't and just hodled all the way through, they're starting to get to a point where actually, certainly for Bitcoin's price, Bitcoin's getting back to where it was pre-lunar crash. So, yeah, some people might be getting excited about they're actually starting to see a green profile again. So, yeah, it's to be had. Alts are still getting crushed. We know that in terms of the dominant side. Where am I staking with BNC? I'm pretty sure it's still staking it on Bifrost. I think I covered that on last week. I think I said I was going to send you a video on it. But yeah, you can stake it on there. Richard, if you're still holding BUSD, can I still transfer from my wallet into Binance and swap into USDT? However, understand the BUSD. Yes, if you are in BUSD, then you do need to be getting out of it. You need to get out of it by February next year. That's when Paxos will stop minting it. You can move that back onto Binance and you can swap to USDT or any others. I don't think there's any fees on it at the moment either. So I think you can swap stables for no fee. So for me, I have my Tether stored on the Binance Smart Chain. So I don't have to pay Ethereum fees when I'm moving it about. I just have to pay a small amount of BNB, but it's still in USDT. So that's what I've done. I think you'd be allowed to spend your BUSD on Binance still, even when it terminates. I'm not necessarily sure you will. I think, the amount of Binance, once BUSD can't be minted, why would Binance keep it? Because they can't go back to Paxos and redeem it. They're not going to make any money from it. So I don't think that's the case. I could be wrong myself on that one, but personally, I'd move it. That's my personal opinion. Whatever stable you want to move in is your choice, but we know BUSD will die, and it is dying. Everything just seems odd. 1 week the SEC clamped down on alts, and then all of a sudden, that's the other thing is we didn't even talk about the fact that the SEC listed 67 different alts as securities. Well, on the other side, everyone's talking about the XRP case is going to settle soon. Everyone got super excited about those emails that came out, which, to be fair, there was a little bit of a smoking gun in one of them, but I don't think it's a slam dunk as everyone had suggested. But you're right, there's some real mixed messages in terms of that. Total 3 looks bearish. So Total 3 is the full market cap minus Bitcoin and Ethereum, and it's probably standing around about 300 million. I bet at the moment, and yeah, well, if Bitcoin dominance, okay, it's retraced from 52%, but they get to just over 52, then that is going to be crushing Total 3. I don't have Total 3 up, I don't think. Total 3. So look, I see. You're in crypto when you can just know that figure. I said between 3 and 400 million, 338. I mean, I get what you're saying, but it's sort of, this is the 2018 high. It's come back off that. It's bounced a couple of times off that now. These are weekly candles, bear in mind. But there's no reason why it can't fall through, of course. But look at the chart at the moment. It's found some previous price history. And, wicks, wick, loads of candles, wick, loads of candles. There's something here. If it loses it, you're probably actually talking down to 160. You could be half the amount, which would absolutely kill some altcoins. That'd be a great buying opportunity if it did. What percentage do Bifrost offer on the stake? I don't know. Come on. Let's see if I can find that out for you without having to connect a wallet. Might have to connect a wallet. Let's just cancel that. Staking. Oh, I'm going to have to connect a wallet. I'll have to get back to you on that one. I don't want to connect my wallet because it kind of just shows everyone what I've got. So, and then smart people could work out what my percentage is and then work out what my overall portfolio is. So I'll get back to you on that one instead. I think that's why I'll leave that. Okay, we don't need that one anymore. And we're going back over to here. Right, I think I've caught up with the questions there. Okay. So we're going to now talk about, unless there's anything else anyone wants to add, we'll type it in whilst I start talking about this. We're going to talk about GMX. Now, as I said, GMX may be a platform and a project that you guys know far more about than I do, because I have never used GMX throughout my entire trading career. I wouldn't say it's a career. It's not successful enough to be a career, but my trading lifespan. So I don't know too much about it, and I've always been intrigued by it because it does get, in theory, I like the idea of it, a decentralized perpetual exchange, but it also offers swaps, so effectively what we would call spot trades. And I thought, okay, there's potential here. We'll explain why that's a positive in a bit. But I've heard some stories from guys within the group, and from reading the messages that Simon's put out on Telegram, and particularly relating to fees and long-term open trades and all that. And for me, I'm not that afraid of centralized exchanges, whether that be the likes of Bybit and Binance and everybody else. It doesn't put me off. And so because I was so used to using Bybit, I thought, well, why move away from it? And so I've just never really bothered to. But someone asked for this to have a look at it. And ultimately, the token itself is what we're researching now. Of course, we've got to talk about what it is and how it does it. But that's what we're looking at. And most of you will know that it's actually had significant strength shown over the last 12 months, far greater than a lot of other altcoins that are out there. And so there's got to be something behind that. And so I do think it is worth having a look into. As always, I've got some notes that I've made, so I will be looking over onto the left monitor just while I run through some of those. So what is it? We've already mentioned it's a decentralized perpetual exchange, which also offers the users an opportunity to do swaps, or what we'd call spot exchange. It launched on the Arbitrum network, which, for those of you aren't aware, is effectively a layer 2 off the Ethereum network. And that launched in September 2021. But prior to that, it actually did exist as something else. And I covered this probably a few weeks ago when we talked about Casper for the very first time. So probably a few months ago, actually. It went by another name, and that name was Gambit Financial. And that was a decentralized exchange based on the Binance Smart Chain network. Well, actually, back then it was the BNB network, but it's still what the Binance Smart Chain network is now. And that had been around itself for only about 9 months, but ultimately they decided, well, they had these 4 native tokens. I'm going to really dumb this down. And the exchange itself just didn't have the feel that they wanted for it. And with those 4 exchange tokens, each having a different purpose, but very similar to each other, I think they just assumed it was quite confusing. So they decided they were going to get rid of those 4 tokens and were going to combine it into 1 token. And then they would do a full rebrand. And they moved it off Binance Smart Chain onto the Arbitrum network. And so that's what they did. And it ceased being Gambit Financial and it became GMX. And then this was effectively updated, as you can see. So why do I mention Gambit Financial? And the reason I brought this up when we talked about Casper is, straight off the bat, one of the things that attracts Siam, I'm going to take this off because it's far too bright. One of the things that attracts Siam to GMX and to Casper is the potential SEC security proof nature of GMX. GMX is a decentralized token, which on the face value didn't have an ICO. And so you would think, okay, it potentially fails a Howey test. And so unless they update the Howey test criteria, how can it be deemed as a security? Well, the reason I want to mention Gambit Financial, bearing in mind that Gambit Financial was GMX, is Gambit Financial did have a pre-sale. And so actually, I'll talk about this when I get to advantages and disadvantages later on, it may not be, if you're just looking at this from I'm going to go into it because it will be SEC proof. Actually, it might not be SEC proof. And when you do a bit of digging into some of this stuff, you'll actually see that 20% had a pre-sale. Okay, so they did actually sell to the public. It was whitelisted, and you could go in and you can kind of see. Here you go. There were 500 slots. The pre-sale price was there, so people bought this, and therefore you could determine that actually it may meet some of the Howey criteria and therefore be classed as a security. One of the other things that is interesting was when you do look into Gambit, because we don't know who the team is on GMX. They're not doxed, so we don't know. But we can find some players that were involved in Gambit Financial, and we can assume, we have to make an assumption that they moved across with them. Now, they could have just sold up and moved on. We may not know that. But there is an opportunity for you to find out who the team is. And you can see there was clearly a team here because they got 5% of the GMX of the Gambit token, which was called GMT, distributed evenly over 2 years, and that got moved across as well, as we'll see in the tokenomics there. So just bear that in mind. I want to just say that straight off the bat because I know it's been talked about by other people in the group that it potentially could be SEC proof. I don't necessarily think that it is. I also, at the moment, don't think that anything is SEC security proof except for Bitcoin, because they have clearly said on numerous occasions that all cryptos except for Bitcoin are or could be classed as a security. So we don't know. Now, I think there are a lot that, to be fair to things like Casper, if we apply the Howey test how it currently is, and that's us applying it, not some crazy SEC man or woman that decides that they want to move the goalposts for their own gain, then I think Casper does not satisfy the Howey test and shouldn't be classed as a security. But we don't know, and the SEC haven't come out and said anything other than Bitcoin is safe. So we need to just keep our powder dry and our minds clear about that. Anyway, back to my notes. Let's just have a look. So we talked that. So it launched on the Arbitrum network in September 2021. But actually, and those of you that have used it, you'll know that it's also now available on the Avalanche network. And so it launched again on the Avalanche network in January of 2022. Is there anything important? I don't think so. So, what is it in a nutshell? Well, if you were to use a centralized exchange, whether for perpetual trading or for spot trading, you have to send your funds from your private wallet. We're talking about security, hard wallets, cold wallets, whatever you want to call them, to the centralized exchange, and then you can carry out your trades, and then you can either leave it on there or you can send it back. Well, what decentralized exchanges allow the opportunity to do is to actually just connect your own private wallet for a limited time to this, let's just call it server, this exchange, be able to make the spot transaction or the perp trade that you want to do, and then you can just deactivate your wallet. And it did technically leave your wallet, but only whilst you were actually actively watching it. And then when you shut down and close up the app, it's back behind whatever protection criteria you have, whether that just be your password because it's on your desktop, or you've got a hardware wallet sort of security as well behind that. So that is a very appealing thing to people. And, for those that traded through 2021, 2022, there were billions of dollars that have been taken from people, either interacting with centralized exchanges or just leaving stuff on centralized exchanges and then those being hacked. Now, that's not to say that DeFi is completely 100% safe. And we're going to go into a few instances where that hasn't been the case, particularly with GMX. But that is one of the main appeals. So let's have a look. I'm just trying to run through some of the other notes. So there's a really good article here. For me, this is it. I don't know if I'm at the top or the bottom here. What's going on? There we go. I found this article after I'd done my research on this, but I think it's so good. I wanted to show you it, and I will post this in Discord. This just sums up everything that I'm going to talk about with GMX, but we will just go onto a screen that isn't white and shining in my face for now. Obviously, it's not just as simple as connect your wallet and away you go. There is some intricacies behind the exchange, and more importantly, if we're looking at GMX as a research token, how does that fit within the exchange? What I will say is, initially, I was going to go through a run through of how you utilize this exchange and how you go about doing the trading. But to be honest, I don't know because I've never done it. And also, Siam has done a video on it, and if you go onto the portal and you go into the Eager Beaver module, you can have a look at how to use DeFi trading platform GMX to trade directly from your MetaMask wallet. It's a 20-minute video. It's about 10 minutes at the beginning, just how you move your Ethereum, whatever you need to move over and bridge it to the Arbitrum network. I don't think it's as complicated as necessarily doing that now, because if you were to buy Ethereum on Binance, when you send it, one of the networks you can select is Arbitrum. So you don't have to use any of these bridgings anymore if you don't want to. This video will just show you how to place a trade, how you can do all that kind of stuff. And then also there's like a user guide when you go into the white paper of how you can do it, how you connect your wallet, how you even settle your RCPs to put it on MetaMask, how you can open a long position, how you manage the positions, whether or not you want to add equity to the position, whether you want to reduce it or close it down, how you set stop losses. You can go through there, you can have a look at it all. Simon kind of covers most of this. Anything he doesn't cover, you can find there. So I can save us 30 minutes tonight by just not going through that with you guys. So just assume if you are going to use this for trading, then this is where you need to go. Now, in terms of, where is it? In terms of what you can trade on here, and this is where I was quite surprised. I thought you could trade loads on GMX, but actually, you can trade very little. You can trade Ethereum, BTC, Link, or Uniswap, and that's it. That's all you can trade. Now, there is a liquidity pool, which we'll talk about in a moment, which has a lot more tokens within that. And so you've got the likes of Ethereum, you've got wrapped Ethereum, you've got wrapped BTC, and you've got to remember any BTC that you want to trade on here will need to be wrapped BTC. Linked, Uniswap, USDC, Tether, DAI, and Frax. So the last four are all stable coins. And so, yeah, so I was quite surprised that there isn't really much you can necessarily trade on here. And again, from someone that's come from a centralized exchange like Bybit, which has nearly 200 trading pairs, you kind of call into question, do I need, which, by the way, does all of the four that you can trade here, do I necessarily need to move across to that? But yeah, so what I want to just get into is, I suppose, the tokenomics and how those tokens necessarily work. So it's not just as simple as connecting your wallet and off you go, because we've got to understand what the utility is behind GMX and how that works. But actually, it's not just one token that they have. So there is GMX, but if you do use this, there's another token called GLP. Now, GLP represents the liquidity pool. Okay? Now, apologies if I'm going to start throwing some stuff out here, but hopefully most of you know what a liquidity pool is. But effectively, they call it here, they call it a multi-asset pool, but yeah, liquidity pool. What they've done is people can come along and they can stake or provide liquidity in the assets that I just listed before, with your BTCs, your Ethereum, your Link, and your stable coins. And then that liquidity pool is used to be the counterparty to any perpetual trade that you go on to make. Now, if you do lock up your Ethereum, Bitcoin, whatever it is that you want to do, then you effectively get paid, or you get rewarded, should I say, for doing that. So it's kind of like a stake and reward. But in this instance, it's complicated. I don't want to necessarily go into it, but you don't necessarily get a GLP token. You get one that's held in escrow, and then depending on how long you hold it for, it can then be vested and turned into an actual token. And if you ever want to unlock your liquidity, I can't remember what the unlock period is. It's probably around about 28 days. Most of them are. You can do that. So there's the GLP side of things. So there's the liquidity pool, which we'll come back to later when we talk about the trading side of things. Now, the good thing is you can go into the dashboard and you can have a look. That's what we're looking at the moment. Ignore GMX. We've got the GLP on this side here. So the supply is just under 500 million GLPs, and the total amount that's staked is $516 million worth. So that gives a price of a GLP token of just over $1, 1.03. But it also gives you a breakdown of where it is. So the largest chunk at the moment, I think, actually it's Ethereum. Looking at this now, Ethereum. That's no, yeah. So I thought it was USDC. There it is. It's the weight here. So it's 38% is in USDC. Then you got Ethereum at 25, BTC at 24. Then you got some stable coins that all the way go through. But I think at the moment it's around about 50% is stable. 48.5% is a stable coin percentage for the liquidity pool. But it gives you a breakdown of that, and you can go in a lot more detail in the charts and just see how that is used across there. So then you've got the GMX token. Now, the GMX token is the utility and governance token for the platform. So much like a lot of these other tokens there, you can stake it and you can be rewarded for staking it. We'll go into that in a moment. Then it provides that governance, because ultimately at the end of the day, this is a DAO. And then whatever you stake gives you voting rights to either propose proposals or to vote on proposals in how you want to see the platform and the project move forward. I just want to get rid of that there at the moment. Don't want to get into the tokenomics just yet. Right, but not that one, this one here. So ignore that it says buy GMX or GLP. I just want to actually have a look at the two boxes that you got there. So you got these two tokens. Now, if you were to provide liquidity to the market, to the exchange, what happens is 70% of any of the fees that the platform generates are effectively used to pay or to reward those that provide liquidity. The remaining 30% of the platform fees generated are then used to reward anybody that stakes their GMX token. And you can kind of see the percentages down here. They are ever so slightly different depending on which network you're using, but effectively you're looking at around about 4% if you stake your GMX, and it's around about 15, just over 15% if you provide liquidity for the GLP, for the liquidity pool. So there is obviously reward to doing that. And now what you're relying on is the popularity of the platform to generate sufficient fees for that to be worth your while. And again, you can go into a little bit later on when you talk about the tokenomics and everything else of how that's effectively paid to you. But long story short, with GMX, if you do stake it, you're actually paid in another token. It's called ES-GMX, escrow GMX. As I mentioned, if you decide to vest that for 12 months, then it does actually turn into GMX, and then that is used and that's actually given out to you. Now that's a way of managing the inflation rate of the token, and the inflation rate of this token is relatively small. We'll go into the tokenomics a little bit later on. I have not bothered sticking to my notes, so let me just check where I'm at with stuff. Yeah, I should have said this a lot earlier. One of the actual cool things I do like about GMX is how it gets its real-time price data. So if we go back to trading, the trading side of things, how it gets its real-time price data is by using another project that we've talked about and I've done a video on. That's called Chainlink. It uses one of its oracles to get that data. So it's quite nice that something that I am quite passionate about, is probably the wrong word, but something that I do believe will do very well is actually now providing information that has a genuine use case for another token that we're looking at. So it's just reinforcing that there. And I'm not going to waste any time going through necessarily what Chainlink is or the oracles. Again, I know I've done a video on that a few weeks ago. Just have a look back on Vimo. If you can't be bothered to do that, I think Simon put one out on his main YouTube channel, which is basically me just going over that. I think it was only a couple of days ago. So it's like a 20-minute version rather than the 2 hours I spent for a whole call to save you a bit of time. But I do like the fact that it is using something like Chainlink. So the one thing I did want to sort of go through, I think I probably covered, here's that escrow I mentioned there, and it turning a 12-month vesting period. I didn't talk about multiplier points because it's not something I necessarily understand. We'll go into tokenomics a little bit later on, just trying to skip through. Okay, that's tokenomics. But I'm just going to bring up this here. So this is the GMX tokenomics. There are 13.25 million GMX tokens. Spoiler alert, because we've not gone through things. Now, I'm not actually going to take you through this flowchart diagram that you can see up here. You can have a look at that and you can, just make yourself happy whether or not you want to use it. What I would just say is, I think most people will know the acronyms that are in here, but if you don't know what AMM is, that's Automated Market Maker. And effectively, when we go into doing the trades, Sam explains this in his video, whatever price you want to go in at, there will be liquidity for that. There's a small amount of slippage, like a maximum level of it, but generally it just makes the liquidity pool will match whatever you want to do. So it's an automated market maker algorithm or whatever it is. So I'm sure I could explain that better. But I just want to have a look at this bottom bit down here. And again, just to very Janet and John go through what it is. But let's just start at the beginning. So liquidity providers deposit their supporting assets into the liquidity pool and mint the GLP. So that's what I've talked about earlier with your BTCs, your Ethereum, your Link, your Uniswap, and then those stable coins. It's automatically staked. You get that. Now that we've got a liquidity pool, traders can now use GMX's derivative automated market maker to trade with leverage against the GLP pool by depositing some collateral. And Simon goes through necessarily how you go and do that, so I'm not going to explain it, but you can already see, so the liquidity providers are just a separate entity. They've already staked, they're locked up. Now Joe Bloggs, who has no interest in either staking GMX or getting any GLP from providing liquidity, they just want to trade on a decentralized exchange. they now have someone to trade against because the liquidity is there. The GLP pool is the counterparty to the traders, which I had already mentioned. And so if the trader makes profit, and this is, we'll go on to this a little bit later on. If the trader makes profit, then the liquidity providers make a loss and vice versa. This is a bit like a casino now. I was going to say if the casino allowed every punter to win, they'd go bust very quickly. But let's just say if suddenly the market went in one direction for a very long time and it was very well signposted, everybody traded that way, unfortunately that will then drain the liquidity pool. And so that's the risk you get for staking or providing that liquidity. So there's the counter argument for doing that. Is now generally humans are not very good, particularly if they do it on their own. Retailers are not very good at trading over the long term. So chances are, much like a casino, the house always wins, and you're probably going to do all right with that. But we move on to step 4. Collected fees are distributed to the liquidity providers and GMX stakers with the 70-30 split. Then the GLP holders and stakers receive those additional tokens I talked about. So they escrow GMX and these multiplier things that can then be staked again to compound the yield. So a bit like going back to our rebasing DAO days of whatever we were paid out, we can just stake and then we can get the cubed nature of that, if you remember that game theory. We move on to number 6. GMX trading engine has a flash loan resistance function and a front run anti-mitigation. I'll be honest, I don't necessarily know what that means, but I'm sure that's great that it has that. And GMX holders participate in governance to adjust the fees and manage supported assets. And so that's sort of where we are. And these numbers here correlate to where these numbers then fit out on this diagram. So now that I've explained the green, you can then go through that at your leisure. So I think that kind of covers most of the stuff there. In terms of the dashboard, there's plenty of information that can be found on here. So obviously you got the docs will take you to what effectively is the white paper. So you click on that and then you got through everything there. We'll be going through that in a moment. The ecosystem. So talks about the governance, but where you can find stuff. So if you want to see what the latest proposals are, you can go to snapshot.org. It'll take you straight there. Same with if you want to vote on the governance. If you want to go on the stats that are produced by GMX, we're going to have a look at that page in a little bit. It's there, and then announcements are done through Telegram. And then there's all of these community projects that have been made. Now, remember, this isn't a layer 1 blockchain. It's not like dApps are being built necessarily off it. This is just documentation that you can find to see what is happening within the GMX trading. They're calling that the ecosystem, but that's where it is. I suppose there probably will be some data in there about what they're doing with the tokens from the liquidity pool, which would be useful to have, especially if you are thinking of locking those up. But yeah, a lot of information that you can find through that. If you wanted to buy, you can just buy the tokens straight from the site, and then earn is if you want to then go and stake it. So if I was to ever connect my wallet, you can see now I can stake if I wanted to. And there's the APR, 3.97% at the moment. Obviously, I don't have any. And if I were to stake it, I don't have any in my wallet to do. But it's as simple as you click on that, enter the amount, hit enter, approve it for your MetaMask, and jobs are good. But yeah, this would then obviously track what your rewards are. So again, another useful platform for you to be able to just easily see where that is. You then got the dashboard here, which gives you the large amount of information. So you got AUM, assets under management, it's just under $1 billion. So that's taken into effect the other sides of the trades that are happening. You got the GLP pool, 24-hour volume, interest, long and short positions as we see. So seems to be a lot more people favoring longs at the moment than shorts. And then it even gives you a breakdown between Arbitrum and Avalanche. It's fair to say when you go into this, Arbitrum network is used far more than Avalanche's. So if you were going to use it, I'd probably go through the rigmarole of sending you Ethereum or whatever it needs to be on the Arbitrum network. And then the fees since the 28th of June. So since the 28th of June, it's accumulated nearly 1.5 million in fees just on Arbitrum, just over 1.6 together. So it's doing all right. Now, I'll get into tokenomics in a bit. If you want to go for even more detailed stats, and this is where I'm just not going to bother necessarily going through it, but you can change this to just all time, and then these will all recalculate themselves, and they've just got everything. So, useful to go through. I think some of the more important ones, user interaction, new versus existing users, just trying to see where things are driving it. I mean, you can see new users are dying off and existing users aren't necessarily returning over the last few months. But very strong through the strength of the bull market. I think this uncertainty period of whether or not we're not sure if we're out of the bear market and going into a bull market or what have you. But you can just utilize that data however you see fit. But it's all generally there for you to have a look at. But now let's actually get into the tokenomics of things. I think this other thing does it better, to be fair. So as I mentioned to you, when Gambit closed, they obviously had to take those 4 tokens and turn them into the GMX token. And of that, so there's 13.25 million tokens that potentially, that's the total market cap. 6 million of those, at 45%, were for that migration. There was another 15% or 2 million tokens allocated to the floor price fund. Another 15% was reserved for the vesting of your GMX rewards. So how you get your APY. Then you got liquidity. So that was another 2 million tokens. There was a 7.5% for the pre-sale round. So, already saying in their documentation here, there's a pre-sale round as well. And then the original marketing and partnerships were distributed, and that one has been released slowly over the last 2 years, and we can have a look at that when you have a look at the release schedules. And then there's a beautiful little, I don't know what you call that. It's not quite a pie chart, it's missing the middle bit. Donut chart or something like that. Anyway, ring chart of how that all looks. Just see if there's anything there. So this is the inflation rate of it going up. That's fine. Right, let's get back into that's not necessarily what I wanted. Right, here we go. Yeah, back to my notes. So as I said, max supply is 13.25 million. The current circulating supply is just under 9 million, 8.8 million tokens. And that gives it a market cap currently of just over 500 million. Now, what that looks like there is there's still about a third of the tokens that are still technically left to be released. However, they don't necessarily have to be released. There's something it does say in here. I should have gone through this. So focusing max supply is 13.25 million, around 8.4 million circulating. The increase in circulating supply will vary depending on the number of tokens that get vested and the number of tokens used for marketing partnership. In any case, minting new tokens beyond the 13.25 will only be possible for the governance to accept it. And if they did, there's a 28-day. So if they decide they want to go above 13.25 because they've unlocked all of those, they'd have to put it to the vote. If they then did put it to vote and it was approved, you would then have 28 days before those new tokens became unlocked. So you'd have 28 days for you to react and dump your tokens if you didn't like that idea, etc. There's something else in here which talks about the emission rate and how slow it is, but I can't find where it is. But the emission rate is particularly slow, so we're not thinking that in the next 6 months that those remaining 30% are actually going to be released on the market. What is interesting with the tokenomic side of things is going back to the dashboard, is 80% of all GMX, I was going to say in circulating supply, but of the circulating supply is actually locked up in its state. So again, a very large proportion of it is relatively illiquid at the moment, leaving only 20% that's actually out there on the open market. And so again, with that 28-day unlock period, they're not as susceptible to any quick shocks to the market because you can't really do anything. There's only a small amount of selling pressure because there's only 20% of those tokens that are currently in supply. So let's just work it out. So that would be about 1.6 million tokens that are actually available to be either bought up or sold, depending on which way the market's going. So that can help stabilize the price somewhat, and potentially that might be why it's had a relatively decent run over the last 12 months. In terms of exchanges you can find it on, if you're going to buy it, it's on most of the major exchanges, the likes of Binance and Kraken, OKX, Crypto.com. MEXC I'm now included, because those of you that are into Casper probably have an account with that as well. But there's also, you can find it on dexes, and again, all the common dexes, whether that be Uniswap, SushiSwap, especially with Avalanche, you're going to have the likes of Trader Joe, for those of us that are from the Wrap Memo days. But yeah, so that's where that one sits. You go on to DeFi Llama, there's loads of information that you can find on DeFi Llama. Again, a treasure trove of just being able to see how it's performing over its entire life cycle. So I'm not necessarily going to go into that in too much detail. I'm just going to see if the unlocks was where it told me what the release rate was. The linear unlock was increased from 0 to 230. Yeah, so it's 2,000, just over 2,000 tokens per week are being released, and they've only got 1.3 million tokens, so they must be getting close to that actually being the end of that. Right, sorry, back to my notes. The team, well, I kind of mentioned there isn't a way of understanding who is actually the major player behind the team. We do know a couple of the key signatories from, who get to sign things off and who has the authority to, multi-sig any wallets. There's two people that their names don't necessarily mean anything to me, but Carnval Amin and Benjamin Simon are the two of the names there. In terms of significant holders, well, we know from the Gambit Finance days, Arthur Hayes, who, if you guys don't know who he is the CEO and I think owner or founder of BitMEX. He has like 200, or even when it moved over, he had 200,000 GMX tokens. God knows how many he necessarily has now. A company called Block Tower given just under 350,000 tokens, and Flood Capital were listed as a major token receiver, although they never disclosed the amount. So in terms of the teams and major players, actually there's quite a few, and suddenly we have to ask the case, well, is it so decentralized now if 3 people already have, as part of, well, even pessimistically, 750,000 tokens? They're going to have an awful lot of sway and voting power when it comes to that. In terms of the roadmap, sadly, I couldn't find much information on the roadmap. There's no dedicated roadmap that's out there that you can see. Some of the things that people have talked about through some of the proposals that have gone through and articles that I've read, they want to improve security. They're actually looking at maybe adding an additional network to the protocol, and this one would be Coinbase's Base network. So it's going to be called Base. It's a Coinbase one, which is an Ethereum layer 2 protocol. Again, looking for a better UI and UX. I personally think that it is a bit confusing, particularly when you get into the trading side of things. And they're also looking to bring more assets onto the platform, so other things to trade. Now, they potentially could be synthetic assets, so something that isn't actually AVAX or another token. I just said AVAX, I've seen it on the screen, but something that just effectively mirrors the price of that. So again, how that works and where that works and the risks of that potentially depegging against the actual asset that it's supposed to be are all things that would need to be taken into account. It does have quite a big social following. There's a lot of crypto influencers that, I don't want to say shill it, but promote this quite heavily and are big supporters of it. So it's got big followings on Twitter, on Discord, Reddit, and the like. So yeah, in terms of, well, let's have a look at the price and then we'll have sort of a summary of positive and negatives. So this is a daily chart at the moment. You can kind of see from June last year, what am I on here? CoinX. So from May 22, so I haven't found one that goes further back. I'm sure there probably is. But you can see what I mean. While most things fell away in September, well, if we just, again, let's just bring up Bitcoin. So as Bitcoin kind of fell away and down during that period, this has just sort of climbed up and continued to climb. And then has only recently started to repeg itself towards Bitcoin in terms of its general direction. So actually, it has shown a decent amount of strength over that period. Now, I'm not sure when Simon first sort of put this on his radar. I'm trying to get rid of this bloody thing here. But for me, I just like to draw sort of key rough levels, but I'm sort of thinking probably down here. $40 is somewhere that I'd be looking at. I think where we're at the moment in terms of resistance, sort of that, you know, $57 to $60 is kind of the big play, and then obviously around about 86. If we were to then take a fib level down, I will zoom in a second, people, and have a look at where we're at with that. It's probably working okay. Yeah, we just breached the 618, so you know we've got to get through this level, which we've struggled in the past to get through. But if we did, that's sort of, you know, just north of 60 and 61, and then the steps up with I think that kind of ties in. You know, if you pull that one across, I think they're kind of the key levels that I'd be looking at. And again, likewise for the fall. I mean, I've not done it. If I did it wick to wick, just so it lines up with this one here. I mean, we're fudging things a bit because I don't normally do it that way. I think there's still some merit within that. But assuming that it did lose 40, then you're probably looking at, you know, low 30s and then 30 down there. But it has shown strength, and it's shown strength partly probably because the user base has continued to increase. You know, people do like to, I was going to say futures trade, but perpetual trade with crypto. They like to think they know which direction it's going to go in, and this really appeals to anybody that doesn't particularly like centralized exchanges, especially if they're only focusing on Bitcoin and Ethereum. And generally there are low fees. I'm going to talk about fees in a moment, but generally you consider them to be low in terms of maker and taker fees. Now, sorry, I got sidetracked from price there. But yeah, so that's where I sort of can see some of those pricings. In terms of sort of trying to summarize where I think it is, I think there is, you know, some real benefits for GMX, the platform, and then that obviously has a knock-on effect for GMX, the token. And the reality is going to be that it is a decentralized exchange, whether you want to do it as spot or for trading. And so for those people that want to have control of their own tokens and not want to use that, then this is the place to go. It's not the only place out there. There's companies like DYDX. Now, DYDX was actually the first to really move into this space, but I think it's probably fair to say that GMX has eaten up on that first mover advantage. And whilst I didn't actually go and have a look at it on DeFi Llama, I'd dare to say that it probably has overtaken DYDX at the moment. So, there is a lot of appeal towards that. It does have a strong active user base. I mean, we just click through it, but let's see if I can. Active users, yeah, it has dropped off, but it's still kept, these candles are still relatively high. 2.6 users per day, 2,000 users. At its peak, it was getting 10, but, I don't know what the mean's going to be, but probably in and around 3,000 or 4,000. So, yeah, good to see from that side of things. It's got low fees, as I mentioned, which is appealing, and they certainly advertise it as that. I think just with the fees, there's just something to be mindful of. I don't know if I've got it up. I must have deleted it. Of course I did. Let's just get the docs up again. Let's see if I can find. It's got to be under trading then. Yeah, fees. So just with fees, to open or close a position is 0.1% of the position size. So that's where they advertise it as being relatively low fees. If you wanted to do swaps, then it's potentially, so spot, it's potentially between 0.2 and 0.8 the size. And it's just depending on where that is. But there's also an execution fee when you want to do on top of that. So you've got your opening and close fees. That's 2 fees you've got to pay. Then an execution fee. And if you are trading, as in perpetual trading, there's a borrowing fee. And that borrowing fee is, although it feels relatively small, is it not on here? I can't find it. I'll have to go into... So when we go into the fees here, so you just have to, if I take my cursor off this black box, you're not going to see it, but you've got swap fee, open fee, and then borrow fee. Now the rate of the borrow fee is 0.0026% per hour. That's just on this one. It'll probably vary depending on which assets you're using. That's per hour you keep the trade open, and that's due every hour. So over 24 hours, that's going to increase quite a bit. And again, it's only, it's going to be less than 0.5% or just over 0.05%. But if you are looking at a trade that may take a couple of days or whatever, and you've got a relatively large position size, that can soon eat into your position relatively quickly. And I think that's kind of the experience that Simon's had in a couple of the long-term, in inverted commas, Ethereum trades that he's tried to place, is that actually after a week or so, especially if it's moving in the wrong direction, that really is eating into it. So those fees do necessarily add up, and there are a lot of fees to consider. Now, Bybit is by no means free of fees, don't get me wrong, but their fees, they do fluctuate, but they're generally every 8 hours. So potentially an opportunity for saving it there. And then the other thing to say is, it's, with the GMX token, there is an opportunity for passive income there because you can stake it, and you're getting 30% of all of the fees that they make. And we know they do make a lot. I mean, in the last 7 days, they've made 1.6 million in fees alone. So you're getting 30% of that. So, it's nearly 500,000 that they are then attributing towards GMX holders. And then if you went down the liquidity pool provider, you're getting the remaining just over 1 million of that fee split across yourself. So there's definitely an opportunity for it to be had there. I think in terms of drawbacks, unfortunately, my list is a little bit longer. The team is unknown, which I think there is always a risk with just unknowing who is behind the team, what the size of that team necessarily is, particularly if they have come over from Gambit Finance, and how that locking up of their tokens actually works. I haven't been able to find that out. And then, is it really a DAO? Is there really that decentralized nature of things if there's so many large bag holders, so many whales within the community that potentially could drive it that way? And again, if these are people that have been invested right from the beginning of Gambit Finance, they may have a particular way that they want to take GMX, and so they just use all their voting power to move it in that direction. Given that there are limited trading pairs, how scalable necessarily is this to compete with centralized platforms that can do the same? And that if they are going to look to add assets and they're only using synthetics, again, some people may like that, but the more risk, people have the least risk appetite will probably want to just trade with the actual asset. I think the UI is confusing. And, when you want to place a long or a short, you can't at this moment. Simon will show you in the video, but if I was to place a long and then I wanted to put in a stop loss, I can't do it at this time. I have to place it, then I have to go in, and then I have to simulate that I'm going to cancel it. But instead of actually canceling the whole position, I can then make a trigger price, and it just feels like it is a bit complicated way of doing that. The GLP pool, I've kind of talked about the fact that if traders are successful on the platform, it is going to eat into that pool. So there's a risk there of what you're going to do. Now, I don't want to necessarily suggest there's going to be an opportunity for market manipulation to make sure that any trades that are going away from GMX can then be bought back by just manipulating the price. But I'll leave that for you if you think that might happen. Hidden fees we kind of talked about. The Gambit history potentially doesn't make it SEC proof for any security hearing or ruling. And actually, this is what I want to touch on. I touched on at the beginning. GMX actually has had market manipulation, has an exploit had on it in the time that we've known about GMX. So if any of you remember back in September last year, there was an exploit that cost GMX, a relatively small amount. 500 grand in the grand scheme of exploits in crypto is not necessarily much. But the fact that there were, DeFi always seems to be that there are ways around DeFi to exploit things and loopholes, and GMX has not been immune to that. And so, basically what had happened in this instance is that the exploiter was able to take advantage of the price that was being offered of Avalanche on GMX against the other markets. And the article goes into how they did it and then how they tried to cap it afterwards to try and restrict that. And they did move fast. The team, although there isn't a team, did move fast to be able to cap it at 2 million. So that's why they only were able to get a small sum from that. But I just think, I'm not saying that other exchanges aren't prone to this, but there have been instances in the past where this has had its issues. But what do I actually feel about the token as a whole? And where do I associate? So I'm kind of on the fence with GMX because it does have strength within it, and I do think that as retail traders, we're inherently greedy. And so when the bull market comes, I think people will flock to use perpetual trading sites, and I think people will still use GMX. Like they'll use centralized. There'll be a camp that likes DeFi and a camp that likes centralized. And those that are so anti-centralized will probably overlook some of the shortcomings that I've found. So for me, I haven't decided if I am going to go in. I'm going to monitor where the price is going to be, but I may look to allocate some funds to just put into GMX. It's a small place, see where it's going. If I were to, I don't think I'd bother with the staking. 4% and decreasing is not necessarily worth it for me for the size of percentage pot that I'm potentially going to provide. We're quite low. But, given the circulating supply and the amount of tokens that are locked up staking, if we do get into a bull run, there's so few out on the free market to buy that anyone that wants to get into it is going to have to pay through the nose, because we don't have the 9 million that we're looking at there. We only have 1.5 million for us to get in. So I think that could provide with a decent amount of buying pressure there. In terms of using the platform, it won't be for me. If I ever do go back into derivatives, I will go back to the likes of Bybit. But I potentially, bit like with Bifrost that was mentioned in the chat earlier, I probably, I've gone into Bifrost because it's liquidity pool staking again there, and people are degens. And when the bull run comes in, I think people will use platforms like that, and I think people will use platforms like this. And so I might as well try and benefit from that without having to overtly put myself into any risk or any extra risk by actually using the platform for what it's meant to be used for. So I can't remember who asked for the token. I hope that helped. If you actually want to know how to trade on it, I suggest you just go and watch this video. And if you don't get the information you need from that video, just Google it on YouTube. I'm sure there's plenty of them out there. As always, I'll put all the information I provided out on the group, and hopefully you'll get from there. I'm going to go through the chat now and just see what I've missed. What effect does it have on a token if the SEC deem it to be a security? I understand they've already done it with some, such as Filecoin. So they've suggested that tokens at the moment are securities, but they haven't proven that it's there. So everyone's waiting for the XRP case. Now, what does it necessarily mean for the company, and then what does it necessarily mean for us as a retail trader? Two separate arguments. I'm getting rid of this white screen just because it's blinding me. Let's use the XRP for an example. They lose it, Ripple, and XRP is deemed to have been security. What's likely to happen? Well, the company is probably going to have to pay some form of fine. We don't know how big that fine will necessarily be, but it's going to be a fine. It doesn't suddenly mean that XRP can no longer be traded as a crypto. It just means that it now, for Ripple, have different connotations about how they've done it. And because they released it, if it ruled against them incorrectly, that's where the fine will come for. Now, I imagine it will have a very negative reaction to the price over the short term if it's ruled against, and I'm sure we'll see it will drop. But for those that are buying it even now or later on, nothing's necessarily going to change for us. I suggest for those of us that don't live in the United States, things really aren't going to change. And all that will happen is, we'll have to. I submit my tax returns anyway, so nothing will necessarily change. But if it is deemed a security, then and it suddenly gets regulated, and the FCA from the UK pick up on that, and those start to get regulated, then you may have to actually be providing that information rather than sticking your head in the sand. Now, if the SEC lose the case and Ripple win, I see the price of XRP skyrocketing, and a lot of the other ones that have been labeled as securities, like Near Protocol, which has been labeled as a security now, that's taken a price hit because of that. If XRP wins, then I think a lot of the market will be buoyed, at least in the early days after the case, to think, well, most altcoins will now be safe. But I don't know if you had bought as an ICO back in, say, 2016. I don't know, and you still held it now. I don't know if there'd be any immediate ramifications to you. I'd have to have a look at that. But given that most of us are 2017 onwards, and potentially anything that we bought as an ICO we probably dumped and then rebought, potentially we don't have an issue because we're in a sort of tertiary market for them. I think it's there. Do you see DeFi being the future the same way Simon does? I think there's a lot of positives for decentralized finance. still a lot of risks that go with that. And I can see it. I don't see centralized exchanges as a threat as other people do. And some people see the threat from hacking. Some people see this threat from just people controlling it. And I get that. Not your keys, not your wallet. Try and move your crypto off there as quick as you can, because you just never know what might happen with external agencies demanding that centralized exchanges do stuff. But my time on centralized exchanges versus my time in crypto, we're talking like hours every year rather than days. It's just stuff's on there and then it's off there. So centralized for me works relatively well. What has DeFi really given us other than Ponzi's? Well, yeah, there's been a lot of opportunities for people to exploit. And recently today that happened with Ox Exhaust. Might have been over the weekend. The developer was claiming that they were going to migrate some tokens across, and he just rugged them. And he later, let me see if I can find it. And the audacity of the guy, because he sent a letter, an open letter to everybody saying, yep, sorry that I've rugged you, but I've got a gambling addiction. It's ruining my life. I need this money. I hope you can forgive me in the future. I was trying to find it on Twitter, but can't, which is a shame. Yeah, so there's plenty of opportunities that ultimately you're putting your trust into people that aren't always doxed, so you don't know who they are, and you've got no recourse to go back and claim against them because you don't know who they are should they do anything wrong. So I'm going big on Casper and GMX2 tokens that have never seen a bull run. Is there a risk factor that they could get forgotten about in the next alt? I mean, absolutely. I think I kind of covered this last week as well, but don't get me wrong, the technology behind the likes of Casper is fantastic, but like you say, they're not proven. I think there's plenty of tokens out there that at least claim that they've solved the scalability trilemma, the blockchain trilemma, whatever you want to call it. Granted, not many of them are proof of work. A lot of them seem to be proof of stake, but a lot of people seem to be suggesting doing that. I think for me, it always comes down to, is there a genuine use case? And, is there a real world utility? And with GMX token, I think there is, because people will use the exchange. And so I can see that. And I think the strength, I think a bull run will only strengthen GMX, assuming it can stay around, it can beef up security and perhaps provide some more assets on there. I think it's got, a lot of strength that it can work with. Now, if it moves over onto Base Network as well, and then it's got that Coinbase reach to it and the partnerships that it could maybe bring with that, I think could be brilliant. Casper, I'm more on the fence of, because whilst it's got a great guy that started it and it's got potentially some good tech, it's a mineable token which is about to get mined into the ground, and we don't know if it has a genuine use case at the moment, because you read the white paper for that and it talks about it being the silver to Bitcoin. It still is a payment mechanism, but now we're getting mixed messages because it's also a layer one and they're hoping to build smart contracts off that, and how that's going to work, and is that going to take away from the underlying thing that the people originally mined it for, and all of that kind of stuff. There's competing things. I think, yeah, I feel like I get asked that question every week. I probably give the same answer every week, so maybe I'll just stop answering it now. Surely from a risk perspective, you'd want to pick tokens that have made higher highs from previous bull runs. Well, yeah, but so that depends on your risk appetite. Because no altcoins made that I'm aware of has really made a higher high from the previous bull run. Let's take my favorite. DOT got to 55. If I have to wait till it makes another higher high from the previous bull run, I'm going to miss the move. I still think we'll get a good return on DOT. Now, the hype of parachains took it to there, so maybe we'll be lucky to get to 50. There are still more parachains coming out, so don't get me wrong, there's potential for it. But yeah, I think there will always be tokens that have been born in this bear market that will do well, and there'll be a token that is maybe ranked 4,000 now that none of us have ever heard of that will get into the top 50 and everyone will be raving about it in 2 years. But for me, that's just about balancing the risk of, I won't put 50% of my portfolio into something that I don't necessarily believe or not heard of, but I don't mind putting 2% in. And then if it does make 100x, I've still got a significant return from that without exposing myself to the fact that it might just fall on its ass. I can't hit a home run every swing. Matter of fact, if you ever see me play, well, I don't play baseball. If you ever see me play rounders, no, I don't hit a home run every swing. But yeah. DeFi trading was first done by Mango Markets and Solana. Well, Solana's just, yeah. I mean, Mango Markets, like you say, is hacked, gone to zero. Solana is just, yeah, not the best place at the moment. Something like ADA, despite not making the best progress, has still made higher highs in the last 2 bull runs. Absolutely. But if I have to wait for it to get to the next higher high beforehand, I invest in it, then I'm in trouble. Whereas, there's not many tokens that were around in 2017 and 2021. So a lot of the tokens we're looking at have only had 2021. So we don't know if it's going to make that second one. Have you been doing much perp trade? I have not. This is a sad story, Richard. So a year ago to the day before my 40th birthday, Bybit fucked me. And they genuinely fucked me. I put it was $5,000 on a small ass token. I can't remember what it was. And for those of you who remember the days of Bybit, if you have a stop loss, it's set at last trading price. If you have a liquidation, the standard is it's set at marked price. What happened was the price, I was going short, the price was going up and up and up. It got to my stop loss level, and let's just say 1 cent below it, and it stayed flat at that level for probably about 17 minutes. But the marked price continued to climb, and it got to over a 30% variance from where the stock price was over this time. It just tipped to where my liquidation price was and then immediately reversed. I mean, immediately, within a minute. So I got totally fucked by Bybit, as in they must have seen my position, and because it was $5,000 on a dog shit coin no one had ever bloody traded on before, they just thought, right, we'll take it. But instead of me getting stopped out and losing $200, I lost all $5,000. And so I've just not really traded since then. I'm glad that kind of happened in the sense I was, not sleeping well at night. I was constantly placing trades. I think in 1 month I'd done nearly $30 million worth in trades. I got, still got it here. Bybit sent me some VIP present because I was trading that much with them. That's how bad it was. Yeah, so I've been more comfortable now just to sit on my hands. What will happen is I'll miss the entire bull run. And then when I think the bull run's going to go to the stratosphere, I'll probably start trading again. I'll lose all my money like I did the last bull run. But anyway, we shall see. But no, long story short, I haven't. I've just been doing spot positions. And I have been trading spot this year. So I've been buying stuff and then selling it. I've done that with TAP. I've done it with Caps. I did it with a lot of meme coins. One of the meme coins is a disaster for me, but I did quite well with a lot of the other ones. So yeah, don't worry about bringing it up. Yeah, it's a sore wound, but we move on. Trust me, I've lost bigger on Bybit. I think I lost, was it 27 ETH? Or was it 27 grand's worth of ETH? Because I thought I'd placed a stop, but anyone that's used their mobile phones, if say you're going long and you accidentally hit long for your stop loss, it doesn't work it out, so it never bothers putting one. I did that and then got in a car, traveled for 2 hours, and I came back, I'd been liquidated. So I've made bigger mistakes than that one. But that one just smacked because it just felt like it was manipulated. I went all the way through Bybit. Bybit tried to say that was genuine price action. When I asked them to show me the charts that made up the marked price, they showed me the charts that didn't reflect the price that they had, and then told me that the market price sort of pulls together the average of those 3 charts and then has a je ne sais quoi factor formula added to it. So they were just fucking with me. We should get some of the team on a call like we did with Ohm. Don't retail have other options like SushiSwap? Well, they have. So SushiSwap and Trader Joe, they're just spot markets, if you will. They're not perp traded markets that I'm aware of. Isn't Casper already built on the Phantom network? I think I remember reading something about that, but I'm not. I'll have to come back. OKB has made higher highs since the last bull run, so it's the only one that I know of, and I'm in it. So yeah, happy with that one. But again, it's an exchange and it's doing well. This is my exchange token for the year, the run, should I say? Anyway, right. Yeah, VIP presents. Got to shoot. Okay, no problems. Have a good birthday. I haven't even gotten to Bitcoin prices yet, so I'm going to quickly just run through that in 10 minutes, and then we're done. Hope that helps with GMX, and we caught up with the chat. Sorry about how long that one took. Okay. So, we haven't looked at this chart in a while, but I thought we might as well. So these are these levels that we marked out. Monthly close of candles. Now, actually, January didn't really help us because it didn't do what we said it did, but everything else has kind of come back and tied back in. So, although we dropped down to 15,000, maybe we have to find the new level for that one. We thought we were going to hit 14, but it reversed and we didn't. But then the 24, the 23 held, came back down to the 20 beautifully, but straight through, but rejected at 29. And then, it's kind of held in and around these levels before finally. And then what I'm looking at is June has closed above 29K. That's the thing. And so if we were to just take this chart on face value, we've either got a retest at 29 or we've got the leg room to potentially run up to 37,000. And maybe that's, maybe that's where Rise 3 takes us. Maybe that's something we need to have a look at. Now, if we look at high block, I haven't even zoomed in at this. This is only the 12 hour, but we can already see some levels being built around about 37,000. Now, that's 12 hours, a bit of a ridiculous one to go on. The 3 month will show us. Now, it doesn't necessarily mean, by the way, that we're going to get to 37 in July either. I'm just saying, this is saying 36 and then up to 37. Kind of seeing, we're talking 16, 36, 21, 18, or 19, 17. So it's quite, it's probably 100 billion in and around that level there. But, there's an opportunity that's maybe where we go with Rise 3. And that's not a ridiculous shout in terms of, you see some of the size of these candles. This candle ranged 26%. You take that, it's easily could make that 25% move from where it is. All it has to do is touch it and come back down. So we've got the potential where that could be a play. So we don't normally look at this one. We haven't looked at it in a very long time, but the next target levels forwards have got to be this one and this one. And if we do break this for end of month, then maybe back down to this one. But that's that's at that max pain 24,000 level we were kind of talking at. Getting back down to here. Oh, and where was this? What did I do with that chart? This one. Sorry. This one. Yeah, here we go. So what we got here, so I'll zoom in a bit so you can see. Let's get rid of that. So we can bring it in. So what have I marked up here? Well, the box I've mentioned is, I think we're in an incredibly important level at the moment. Ignore Fibonacci retracements, ignore liquidation levels and anything like that at the moment. You look at sort of 30 to 32K and what that's done in the past. And it's proved incredibly difficult. So beginning of April, we got into that kind of realm, but we were immediately rejected from it. Matter of fact, the last time we've been in that was May last year when we dumped through it. Yes, we had a few attempts to try and stay within that zone, but ultimately we spiked up to 32K on 2 separate occasions and we were rejected back. And then we have a look at the summer drop in between the two peaks of 2021. And this price came down multiple times, hitting 32 to 30,000, finding support at that level before bouncing back up. And again, the way up at the beginning of 2021, showing a strong level. So this is an important level for us at the moment. And the reason I mention it is we're still in that uptrend, higher highs, higher lows at the moment. Technically, we've done it here, even if it was a stop now. But let's just get rid of those. If we were to break above this and then retest that 32 before coming back up, I think that, for me, that's just given how much strength this area has shown in the past, a break up there and then a retest and a come back up. I think, we're going to really have to find a reason not to believe that we're back within the bull market after that. Now that could take months to play out. Of course it could. But that to me would feel like we're making some significant moves. So where we're at the moment, I think, is an important level. Breaking of 32 is the psychological level I want to see, and then what it does after that. So these moves that we've had over the last, look at it, the last week, except for today, which hasn't closed yet, been pretty flat. Now, whether or not that's a bull flag forming or whatever, we don't know, but we've had that sharp move from 25,000, another psychological level after a dump down of FUD. Positive news from the ETF announcement, bringing us up, and then we've been consolidating. Kind of feels that whatever our next move is going to need some significant momentum in either direction. So maybe it is going to be not backed by news, but news is going to be used as an excuse to move it. And so we're just waiting for that to happen. But we don't normally see Bitcoin remain as flat as it kind of has for too long before making a move. And it has been in that range now. Or, that 5%, 4% range. It's been in there. I don't know why I didn't use the date on the time one. The best part of 2 weeks, 11 days. So, yeah, certainly building, consolidating, whether it's just running out of steam and it's about to fall away, or it's just storing its energy for the next move. Sadly, we don't necessarily know. If we were to just throw a fib on this, just to see where certain levels can be, I'll zoom in for everyone, obviously. Where do I do it? I have to do it at the top of this wick. So I'll do wick to wick for this, just because we don't know. But maybe we've got that breakthrough. 32, 36 and a half is where we start to run into some of that trouble. And then the rejection. You could pick any one of these levels, really. You have a look, This wick kind of takes us to the 618. These bodies and wicks kind of take us to the 5. And then the 382 down here. So plenty of opportunity for it to come back down in that direction. So yeah, I think there's definitely some room to play there. In terms of just this other chart I wanted to show you, and this is something that someone outside of the group pointed out to me just before I got on. But I love her or hate her crypto Twitter influencer called Lady of Crypto. Made a little post about why she thinks the low is in. I can't ignore the logic. It's difficult just to see a fractal pattern that's only happened 3 other times and think it's gospel it's going to happen. But what we've got in this chart here, for those of you who've not seen it before, is we've got BTC over a decade, and it's broken down into periods. So we've got a parabolic run of the bull run, which is represented in green. We've got the bear market retracement, which is represented in red or purple. It is red, but I think the background color is just sort of shaded that way. And then this is an orange, which is kind of like the consolidation period leading into the next halvening. And we're in that period now. And I didn't move this. I pre-drew this based on 395 days and 395 days and 395 days. I drew that line way before any of this had happened. And it just so happened that the bottom of this current market hit then. And then we entered a consolidation phase, which, again, the consolidation phase, previous cycle, has been an uptick and then a slight retracement before a dump down and a go. This one's been more of a prolonged consolidation period and the uptick. Off we go. So the reason I mention it, though, is I've drawn out where the halvening is. Now, I put it at the 1st of May. It could be the 1st of April. It could be even, I think, about the middle of March. But we'll go with the 1st of May. So we're about 300 days out from this. What Lady of Crypto put in her thing is, within 300 days of the next halvening, there's been no time where we've seen a new low form. And that's right, so we're within that 300-day arrow. I've just duplicated that arrow. Although we had the retest, it never got as low as 3,100. It got down to 3,800. So this one didn't qualify. Similarly, the low down here was 56. We did have a retest. I mean, not within 300 days, but the closest retest we got was 193. So again, never got as low. I need one. Am I missing one here? It's probably this one here. I should have drawn one. But you can kind of see that was where the low was. And then, the very next candle never got as low, the one after, and then the one after that. But, and I kind of, it goes back to the sense of, yes, we may see a retracement over the next 9 months before we get to Bitcoin halving. In fact, I expect it. If you follow the market maker theory, daily and weekly rise 3s on the cards. we are probably going to likely see an M formation and then a retracement down. Doesn't mean we'll form a new low. Doesn't rule it out either. But yeah, I can see us over the next 9 months building, peaking, and then a retracement back down, and then from there we we build into the halving and off we go. But people waiting for that 12k level or 14k level, I think a lot more hopium now. I think the probability of that is a lot lower, not zero, but a lot lower. And as I said, in the last 7 months alone, the amount of FUD that we've had has still not really driven the price down from BTC. And I think people probably overlook the amount of FUD just because it hasn't affected the price. But we've had some big news announcements. I'm not going to go through them. We did it at the top of the call. But I think that has probably shown that 15 is the low. And now, we should be, if you're not in the market, you should be seriously considering how you're going to enter the market and looking at any drops, sizable drops, as an opportunity to position yourself in. I'm not going to tell you what to do. You know that I'm more of a DCA person in, or Sam's more of a all or nothing and just go, in at large positions. It's up to you how you want to do that. But just start to think, if you were hoping you were going to see 15 again, may not be on the cards. So where are you going to settle? Is 27 where you're going to settle? 25, 22, 18, whatever it's going to be. You need to start formulating that plan, because that's 300 days are going to go quickly. Right, I've really overrun. Let's just see. Is there any reason you haven't got 33 to 34 level in your chart? The sign seems to refer to a lot. So Richard, in other weeks, I have identified that as another level. When I've been going through sort of market makers and where I think that might go, I've kind of identified that level, and high block kind of backs that up. Just with this one, I was just looking at it from a different perspective. Just go back to last week's. I went through the M patterns on the daily and whether or not we were starting the rise 3. Everything I said in that is still, in my opinion, valid. So hopefully I'll close it. Or is it the level most visible in the weekly and daily charts? Well, so on this one, it's just a monthly. So that's why it's 29 and 37, because I'm looking at closes and wicks and where the majority of those line. Now, you could argue that open and a close there, wick here, potentially a wick here, is at 33 and 34,000. And if you take that up to 35, you are going to get those. The only problem with doing that is I'm kind of now getting into the level where I'm hitting every single one. But you could argue that there is one there at 33,000. So I'll tell you what, I'll even hit the save. We'll have a look at that. Let me get rid of these circles though. So yeah, tidy that one up for the next time we use that chart. Pretty impressive catching that bottom. Not sure what bottom, but if it was me that caught it or someone else. But yeah, anyway, look guys, I think I've gone on for long enough, and it's 10 o'clock. You guys have listened to me for 2 hours. Thanks for tuning in. Next week, I can't remember what the token is, but I do have a research token. We'll be back to the Tuesday sessions on those, 8 o'clock. Obviously, the links will go out beforehand. We've got Simon's session on Thursday at 2 o'clock. And all I've got to say is, hope everyone enjoys the rest of the week. Me and Bijan, always on Discord. If you've got any questions, just tag us in. Even if you don't tag us in, we'll read it. We'll try and answer. Or just hit me with a message directly, and I'll try and get back to you as soon as I can. Enjoy the rest of your evening. Enjoy the rest of your week. And I'm going to log off now. So have a good one. Cheers, everyone. Thanks a lot.